Welcome back. I'm Pratap here. Today is the 14th March 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. From the home page, scroll down to the playlist Supply Demand Zone Price Action course. So get into this playlist. Here you will be able to find all the training videos. Even I am providing the link to this playlist in this YouTube video description. Please click the link, you will get into this page and then scroll down to the bottom of this page. Here starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. Please join in the channel, it will be helpful to you. Each time when we release a new YouTube video, we will provide an update in the channel. Now let's get into our analysis discussion. Before we get into the yesterday's high liquidity zones generated in our yesterday's end of the day report, look into Nifty and Bank Nifty supply demand zone chain we generated during last Sunday. So at present, Nifty got support at the daily demand zone because inside the daily demand zone there is a 15 minutes high liquidity demand zone is there. See, yesterday it gave an entry and it has given over 115 points move. And look into today again at 9:15 candle, 5 minutes candle, it gave an entry again. After that, see the move from here to here. Already it gave 115 because this is already a tested supply zone. And if you believe because it is tested, it will be violated. And if you are looking for more move from this area, see here again there is a move. In case if you are happy with this 115 points, you would have exited here. But based on supply demand zone, because these are all the normal supply zones, we have drawn them just for target purpose. And moreover, they are already tested. Because these are the normal supply zones, so easily they will be violated. If you believe on that point, and you would be getting even more profit. See, delete this. See, further prices went. Even this one also, see here already tested. If you believe this is also will be violated, that is what happened. See, you can delete this. Then what is the next target? The next target will be the next supply zone. See here up to here prices reached. And finally, it gave you over 265 points move from here to here. The reason is our high liquidity zones we generated from our supply demand zone chain with the help of our NeoStock software. So those who are following the supply demand zone chain video, today you would have got over 265 points profit you would have got. Least case you would have got around 115 points profit you would have got. So this is about Nifty, but Bank Nifty is a different case. This 15 minutes, this 5 minutes high liquidity demand zone is violated today during the first candle itself with a gap down. Prices came below this. That means no more this 5 minutes high liquidity demand zone is violated and all these targets are now changed. Now at present this target is enabled. This is the range, not the target. This is the trading range. Here we have a 75 minutes high liquidity zone, 15 minutes. Here we have a daily demand zone. These two high liquidity zones are having zone confluence. So in this range probably, but today is Bank Nifty moved within this area. I don't think you would have got trading opportunity based on high liquidity zones. Definitely you would have got opportunities based on the Other supply and demand zone, maybe bullish trade setup or bearish trade setup or EMA confluence. Some of those concepts you would have got opportunity. But I am talking about high liquidity zones point of view, because we have a guarantee that they will give some successful trades. But Nifty, you got the very good trading opportunity today. Okay, this is about Nifty and Bank Nifty supply demand zone, an overview, what we generated earlier. Now let's get into high liquidity demand and supply zones. Yesterday we identified 9 high liquidity zones from daily time frame and 75 minutes time frame. Out of these 9, we got 3 successful trades, and 2 zones are violated, and we identified well in advance those two zones will be violated. We know the reasons. And 4 stocks did not get a trade. So first let us look into the zones we got the trades. The first one is Tech Mahindra. This is a 75 minutes high liquidity zone. We have a rally, base rally, and we have fine-tuned to 15 minutes. Inside we have fine-tuned to 5 minutes. Exactly the 5 minutes area we got the entry. So let us look into this stock, how we fine-tuned. Inside this 75 minute zone, we have identified a 15 minute zone. We have 2 base candles. We have a medium size leg candle. This is a leg-in. And these 2 are medium, these 3 are medium size base candles. And then we have a leg out candle. But one point you have to observe here. The 15 minute zone, see the price movement. It's not a very comfortable price movement. One candle is up, again one candle is down. All these medium size candles. Okay, after that we have a leg out candle and a follow through candle. Again a drop candle, a medium, maybe it could be in between. But anyway, this has come out of the zone. So we are not really concentrating on this area. But this is the main area. We need to identify if there is any order flow. See, our real order flows we identify in 5 minutes. So that's why we went to the 5 minutes. But here we have an excellent order flow. See here we have a ERC candle as a leg-in, failed ERC candle as a leg-in. We have a base candle, a tiny candle, and then we have a excellent rally candle. So in this area we have a strong order flow. And another thing is, see, there is earlier, before getting into this area, just before entering into this area, if I draw wick to wick, you will get clarity. See, the prices are trying to reach to this, trying to pick up the orders from this area. But even before this, the main order flow, the order flow is very heavy here. That indicates this zone is having a strong order flow. The price action clue. Rejections from this area. And see the move from here after that. So this is indication, this is the area we have a very strong order flow. As I told you earlier, we should not miss such kind of zones. That is what happened today. Today in the morning, the supply is strong. After that, market is recovered. So even then this zone is able to hold. But one point you have to observe, prices went very close to the distal line. Distal line of this 5 minutes demand zone. They didn't touch the distal line. Just before there is a strong order flow, or maybe the supply would have been consumed by this time, and see the push after that. Probably the supply is weakened and finally reached the 15 minutes target. Around morning 9:15 candle or 9:20 candle, 5 minutes candle, we got the entry, and finally at 11 o'clock 45 minutes it reached the target. And this is the way Tech Mahindra has given a profit 15,000 rupees, which is a 10.9% ROI as per one futures lot margin cost. So close to 11% profit we got. Excellent ROI today. Today all the successful trades, they gave very good ROI. So this is the first one, and the next one is Laurus Labs. First let me go to 75 minutes time frame. This is also a 75-minute zone, demand zone. So this is the one our software identified. This is a failed ERC candle as a leg-in. We have 1, 2, 3, 4 base candles, and we have a leg out candle. So within this area, already prices reached more deep inside earlier, few days back. But at the time, institutions again created a new 15-minute zone. Exactly where we have drawn this. So let me go to the 15 minutes time frame. Look here, we have drop candle, 2 base candles, and a rally candle. In case if you want to consider this as a failed ERC candle, in case if you want to consider, still you can do. You can draw on drop candle, base candle, rally candle, only within this area, 15-minute zone. You can draw. Either way you can draw. But our concentration is in 5 minutes. That is the area you find the real order flow, the fine-tuned 5 minutes area. See, you may find several 5 minutes areas. It looks like the zones are very good, but they won't work well. That point you have to understand. So this is the fine-tuned area. So within this fine-tuned area, we have drawn, this is the leg-in candle as a ERC candle, 2 base candles, and then a rally candle. This is the 5-minute zone we have drawn. See, there is one more zone, rally, base, rally, but this is outside the 15 minutes area, so we don't bother about this. See, today what happened? The prices came and went more inside, not very close, but it went a little deep inside, and finally the orders are picked up, and see the huge rejection. That means the strong order flow in this area, very strong order flow. This huge rejection indicates. And finally reached the 15 minutes target. So this is the 15 minutes target. We got the entry in the 9:15, 15 minutes candle. If you look into the 5 minutes or even 1 minute, which candle exactly we got the trade. 9:15 minutes candle, even 9:16 candle also we got the entry. 2 entries it gave. Because sometimes some people are very strict. They don't trade in 9:15 candle. Later on they will trade. They avoid due to, there are reasons to avoid the gaps and all. So you got the entry. Just a minute please, small break. Hello. So I'm sorry, some important phone call. Sorry for the break. Okay. So here we got the entry at 9:16 candle, and finally it reached the target at 10:35 candle. And this is the way Laurus Labs has given a profit 16,575 rupees, which is a 12.1% ROI. Excellent ROI. And let us get into the third stock. Before that, let me change it to 75 minutes time frame. So India Cements. This is another successful trade today. This is a 75 minutes demand zone. So this is what the zone identified by our software. We have a rally, 1, 2, 3, 4 base candles, and again a rally candle. So inside we identified a 15-minute zone. Inside the 15 again identified 2 5-minute zones. So that means order flow is very strong. They are very close to each other. So in this area, strong order flow is there. Okay, how we fine tune? Let me show you. So I'm going to the 15 minutes time frame. So inside the 75 minutes, when this zone is created in May 23. See here we have a drop candle, 1, 2, 3, 4 base candles and a rally candle. This is the 15-minute zone. Inside this 15-minute zone, some people may say this could be taken as a leg candle, 2 base candles. Even drop base rally we can, but this is not a very strong leg out, a medium size candle. Even then, if you consider only rally, base, rally also, still within this area you have an order flow where we got the entry today. But I consider this is also a valid order flow is there inside this area, because this is a base candle, this is a medium size candle. Sometimes you can include as part of the base itself. If that is that way I treat it. If you don't treat this as a leg out, I consider, because I calculated all these things, different permutations and combinations I have seen. Because this is a candle, we have we have some kind of doubt. Some people may not accept this as a leg out. Then if you accept this as a medium size candle, already we have a drop, we have a base candle. Medium size candle can be part of the base if there is earlier base candles. That is what I told you earlier. These are all the special scenarios. Several times I told this point. Base candle can be part of the, a medium size leg candle can be part of the base if there is a base candle earlier. That way you can treat. But I combined all the 4 so that we got 2 real order flows. That we will see in 5 minutes. So this is the 5 minutes data. See here you have 2 candles. You have a rally candle, 1, 2, 3, 4 base candles and a rally candle. This is one. And another one is, this is a rally candle, 1, 2, 3, 4, 5, 6 base candles, 1, 2, 3, 4, 5, 6 base candles. And we have again a rally candle and a follow through candle. And moreover, this rally candle is a high explosive candle. And structure is good. Moreover, this is part of the high liquidity. And generally, these base candles are coming out of this entire high liquidity zone. You may give lower priority to this zone. But this entire base is part of this high liquidity 75 minutes area. Generally, what I do? If these base candles are coming out of the zone, many times I will ignore that zone. Many times. Because it's like 50-50. The zone may work or may not work. But if the entire base is inside your 75 minutes high liquidity zone, there are higher chances. We can say 80% chances for getting the success rate. That is what we climb for high liquidity zones. And today, the first high liquidity zone, the rally, 6 base candles and rally, this zone is picked up the orders. And strictly speaking, prices did not enter into this zone today. They are just within this buffer area, what we keep for taking the entry. As I told you, 0.1% generally you keep the buffer, 0.1. And for this stock, 0.1 means This is around 193.50 paisa entry. 193.50 paisa. 0.1% means it is 19 paisa. If you round 20 paisa. So within 15 paisa area, the price is sent and it gave the entry. Just if you add 15 paisa, actually 20 paisa buffer you add, even if you add 15 paisa buffer also, you got the entry today. So that way we are considering. So whoever added this buffer, you got a trade today. If you are very strict and if you don't want to add the buffer, if you want prices to enter inside, then only you want to take a trade. It's all the different individuals' opinions. But high liquidity provided an opportunity. Whether you are taking that opportunity or not taking the opportunity is a different question. So that way it gave you an opportunity, and finally it reached the target at 9 o'clock, 40 minutes. So within almost half an hour, the trade is completed. If you look into the 1 minute candles, today 9:15 candle it gave the entry. Those who have, some people avoid trades in exactly 9:15 candle. They take the trades in the next candle. So those people would not have got this trade. And those people who are very strict and they want prices to let go inside or at least touch this proximal line, they won't get the entry trade this. Here the conditions is those who take trade in 9:15 minutes candle and keeping the buffer, only those people get this trade. But what we are tracking the opportunity it is given or not. This is the point you have to understand. These are not the trades I have taken or not you have taken. Whatever we are registering in the Excel sheet is the opportunities provided by the high liquidity zones. Because earlier some people misunderstood. They thought all these trades are my trades. Definitely I take in one stock, I will take the trade, no doubt in that. Which stock I have taken or which stock I missed, sometimes I miss the trades, I am not telling you anything, even I am not asking you also. But at the same time, it is our responsibility to express your happiness, that is a gratitude towards the training you are taking from NeoStock. At least you will put in the comment sections, okay, today I got a successful trade. Because I am not asking your profits. You don't let the people know about what. But you can share your happiness. Because you are learning. But what we are tracking, the opportunities provided by our high liquidity zones. Because we've been tracking for the last 6 months. This is the 6th month. Every month we are checking what is the success rate, what is the average ROI, and what is the overall ROI, and what is the overall success rate. Every month we are tracking. How many trades our high liquidity zones has provided the opportunity. So all these trades are the opportunities provided by the high liquidity zones. Some you may take the trade, some you may not take the trades, some you might have missed the trades. Even I remember, so I think around a week back, one of the stocks with the 5 paisa I missed a trade. Okay, missed. It doesn't mean high liquidity zone is not worked. It worked. But with 5 paisa, my order is not executed. Maybe I am a little late by the time I am placing the order. Or maybe I might have kept the order in a heavy order flow. And the heavy order flow is not completed, but it pushed the price up. That way I missed the trade. So that is also happened to you also, happened to me, and also it will, such kind of things also will happen to you. That's why always we add buffers. This is the reason behind why we add the buffers before the zone. That trade I didn't add the buffer. I was looking for more deep entry inside, that way I kept the trade, but it didn't reach exactly the price where I kept. I kept the trade inside the zone, just to reduce the risk. Minimize the risk and improve the reward. I did that. I played that. It didn't work. But such kind of tricks worked for me earlier in some other trades. whether they work or doesn't work, it should not affect this high liquidity zone performance. High liquidity zones gave you an opportunity. Whether you utilize it or not, that is a different story. Whatever the reasons you are having for not taking the trade, that is a different story. But how these zones are working, that is what I've been tracking in this Excel sheet. Hope I gave clarity for many people who are having or who are thinking, all these are all my trades. They are not my trades. These are the opportunities given by the high liquidity zones. That's it. We are tracking how our high liquidity zones are working, whether they are giving profits or not. It's not about how many you missed or I missed, or how many you have taken or I have taken. This is not about that list. Hope you got the clarity, especially those who recently joined and listening these videos. For them I have given this clarification. But other people who are with us for the last 3 months or 4 months or 5 months, they are already aware about why we are every day tracking these results. See, these results are, one thing is to get a confidence about how my software is working. That is point number 1. Point number 2, these results should also help you boost your confidence. Those who want to trade based on high liquidity zones. Anyway, currently those who are attending the course, probably in a week time you will be able to understand high liquidity zones. Once you get into your trading, you people get this knowledge. Because within a week we will be completing our phase 2 training, and immediately I will be starting with high liquidity zone. Actually earlier I thought of taking this high liquidity zone early, but I stopped it. The reason is the last topic in phase 2, that is position size, is very, very important. I don't want you people miss it. And without learning that concept, I don't want you people get into the real trades. That's why I'm restricting all you guys to only paper trading. Once you learn position sizing, at least you get security for your capital. Even if you get losses, several losses continuously, still your capital will be protected. Because I have seen many people, their first trade or second trade, they lose the whole capital. They never know where to exit. They never know proper knowledge about risk management. They lose the capital. Once you lose the capital, but you upgrade the skills after losing the capital, now you want to trade, but you don't have money in your hands. What is the use? I don't want such kind of things happen to you guys. Maybe you might be delayed 1 or 2 months as per your plans, but not a problem. Delaying is not a problem. Always you get the opportunities. See, yesterday what happened? Everybody said market is going crash, and now again it is bear market. Now we won't be getting any opportunities. These kind of things people told. Even yesterday, out of 3, 2 are stopped out yesterday. Look into the Excel sheet. Okay, they are stopped out, fine. Sometimes our trades should be stopped out, but we have successful trade also, gave excellent ROI. But today see, all are successful trades. Everybody is having fears. Whoever is having fears, they would not have got the trades. But today they give extraordinary ROI they have given. See, all these are all. 11.6, 12.1%, 10.9%. So India Cement has given 23,055 rupees profit, which is 11.6% ROI. So I calculated from this buffer area onwards. The 15 paisa buffer, I added 15 paisa buffer. That's it. That is 0.1% of the price, the proximal entry price. That's it. So this is about India Cement's trade. So we got 3 successful trades, but 2 zones are failed. We know. How we know? Because we already learned in lesson 16 when a zone will be violated. Even before that I explained in our regular high liquidity zones, through special videos also I explained when a zone will be violated, and you have seen several examples in the daily high liquidity zone analysis. For the last 3-4 months, high liquidity zone analysis, we discussed several times when a zone will be violated. So which zones are violated? One is Lalpath Lab. Look into this Lalpath Lab. Sorry, let me go to 15 minutes. This is a 75-minute zone. First, let me go to the 75 minutes. This is a 75 minutes demand zone. Let me show you. We have a rally candle, 3 base candles, and a rally candle. I didn't fine tune. This is 75 minutes drawn. 15 minutes itself I identified. This zone will fail. See, today it is violated. After that again it picked up the orders from below. There could be a trap, but I didn't analyze deep. I just left this. This is the 15-minute zone. Look into this. Look into the price action. By looking into this price action, what you say? All these are all base candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So many base candles here. That's why we know this is not at all looking comfortable. And below there is a zone. Maybe this could be a trap. 15-minute zone here below. Drop base rally. Inside you might be having a 5-minute zone. Let us check. So let's go to the 5 minutes. Because somehow I didn't analyze this stock completely yesterday. I just left it. But we do live analysis now. So probably here you have, if you consider this is ERC, or if you consider all the 3 as a base candles, you will draw your zone like this, 5-minute zone. So exactly that 5 minutes order flow area, it picked up the orders. See here. What are we have drawn? Inside 15, the 5 minutes area, it picked up the orders. Maybe institutions might have kept this as a trap, bull trap. So those who are trading, those who have considered a trade based on the, bear trap, not bull trap, bears. Those who have considered this as a bear trap, it would have achieved our 15 minutes target. Excellent profit. In one candle itself it gave the profit. Maybe this is your entry at 1981. And this one 2062. This is 1981. You got 81 rupees profit. Lalpath Lab. In which candle it is given? At 9:15, 15 minutes candle. If it is 5 minutes, 9:15 if it is 1 minute. Two candles. It closed in the here within the zone, and next candle again it started the moving up. Maybe end of the first 9:15 candle, it entered into this area. So those who look for a trade only in 9:15 candle, many people avoid 9:15 minutes candle trade, but at the end of the 9:15 and almost beginning of the, it might have given with a gap up it came. It would have reached the target. So if anybody traded based on the bear trap on this zone today, say for example, how much profit we would have got? Zero the margin calculator. To 300 is the lot size, and 1,23,000 is one futures margin cost. Into 300, you would have got 24,300 rupees profit just for 1,23,000. You got into 100 divided by 1,23,215. 19.7% ROI in just 5 minutes. 5 minutes or 15 minutes? Let us check. $9.15 candle, you got the trade, and it reached the target at 9:30 candle. 15 minutes, exactly in 15 minutes, your trade is completed, and you would have got 24,300 rupees profit, which is 19.7% ROI. That means almost 20% return you got for your capital you invested. $1,23,000, 20% almost you got. Excellent. That too in 15 minutes time. It didn't take much time, just 15 minutes time it took to reach this target. How I missed it in my analysis yesterday. Maybe there are so many stocks are there. I just quickly finished and I just left it. But it gave an opportunity. Bear trap, bull traps, bear traps, they are all part of our high liquidity zones concepts. Rejections, price action close, that is aggressive trades. Dynamic entry buffer concept. All these are all part of our high liquidity zones. That means we got one more trade today, successful trade. Okay, another one is another fine-tuned, another failed means violated zone is HR motor. We know the zone will be violated. It is a 75-minute zone. First let me show you in the 75 minutes. See, this zone is violated. Which one? The fine-tuned is violated. Fine-tuned, not the entire 75 minutes. The 75-minute zone is still active, but the order flow is violated. Why? We know the reasons. First look into this. We have a rally, 3 base candles and a rally candle. This is what our software has identified this zone. This is the 75-minute zone. Below we have daily high liquidity zone is there. Earlier we got trades. Earlier we got a successful trade. Okay, why this zone is violated? How we identified? Look into the lower time frame, you will get clarity. This is the reason why we need to fine tune the zone. Always I tell you, the reason you have to fine tune, you will find the reasons in the lower time frames only, whether to take trade or not. So 15 minutes time frame, we have identified a rally base rally. So one reason is, see, these candles are went outside. Generally candles went outside, the priority is reduced for this zone. That is what I told you earlier, sometime before in today's video. But anyway, this is 15-minute zone. First let us check 5 minutes. If 5 minutes is exactly within, yes, that is a valid zone. The base should be within 75 minutes. If the base goes out of 75 minutes, it's quite risky. I'm not saying it doesn't work, it may work, but quite risky. Risk will slightly increase. Your success rate may go down from 80% to maybe a 60% level. That is the point you have to understand. (15-minute zone). We have rally candle, 3 base candles and a rally candle. See here, it is already moved up a little outside. These base candles went. Okay, fine. But majority is here. Still we can give a priority. See here what happened. It is zone is tested. Prices went more deep inside. Already earlier it picked up the orders from the outside earlier. But this entire thing is part of the move. These are all the rejections. Indicates there is a strong order flow. Definitely these price action clues helps us take a trade in the next time. So in this move you already took a trade. Prices went deep inside. When a zone is already tested, do you prefer this zone again? No. Unless this is a high liquidity zone, we don't prefer multiple trades. And see today, it is violated easily. See, prices came down and then further moved up. Why they moved here? Maybe in the 75-minute zone, there could be some order flow might have been they kept. That could be one reason. Another reason could be the supply would have been completely weakened by the time it came here, because this particular demand might have consumed some supply, and some more inside 75 minutes orders might be there. Those people who trade based on 75 minute zones, that is WIT traders or MIT traders, those who use, some order flow might be there. Because supply is weakened, again it went up, again came down, again picked up from here. We don't know. Institutions might have added new orders here, we don't know. But anyway, we don't look into all these reasons. We know the zone will be violated. That is what happened today. If that is not the case, your order would have been stopped out. Maybe you would have kept your stop loss a little below this zone, distal line. Still it hit your stop loss. Definitely, this much won't be the stop loss buffer. Stop loss buffer maximum up to this area. Let me draw. Approximately I am saying. But we need to calculate. How to calculate, you will be learning during this week. Maybe approximately your stop loss would have been like this. But still went below. That means in case if you take an order here, still it is your stop loss will be triggered. But anyway, we can't place the order because it is a tested zone. And moreover, prices went deep inside earlier. And today it is easily violated. I am just trying to tell you the reasons. What we are identified, they are working very well. Because we know the reasons when a zone will be violated. A normal 5-minute zone. Normal means not high liquidity zone. So the normal 5-minute zone, don't take more than one test. And what is the other reason? The structure, price structure is not good. The base candles count is more. Or there will be only leg candles. Instead of base candles, leg candles will be there. Such kind of cases, the zones will be violated. These are all several different reasons. Okay. So apart from that, the 4 more zones are not executed. One is Astral. Astral is also a 75 minutes high liquidity zone. Prices came very close to the zone, but didn't get it. Even if you add the buffer also, it won't come into the entry level. This is the 75 minute zone. We have a leg candle, 1, 2, 3 base candles, and we have a rally candle. This ERC candle. and a minimum required body is there for this candle. Minimum required body to qualify the leg out. Earlier I told you minimum 30% body is there, and if it qualifies, mostly you can consider. That way we considered. And inside we identified, this is software will do all the calculations. That's why perfectly we are getting the zones. Because some zones manually with our human eyes, you get some kind of doubt whether it is a zone or not. So within this 75, we fine tune to 15 minutes area. So here we have a rally, 1, 2, 3, 4 base candles, an excellent rally candle. See here prices came very close to the 5 minutes fine-tuned area and again came. That means there is a very strong order flow. This is a rejection. These rejections always helps. Rejection is a price action clue. So we should not miss a trade in such kind of zone. Provide 5 minutes is also good. You should not forget that point. So that's why we went to the 5 minutes. And again fine-tuned the zone inside 15 minutes. Here I identified a leg-in candle, rally candle, 1, 2, 3, 4, 5 base candles, and a leg-out candle. This is the way I have drawn the zone. Given priority to this rejection before this zone. And yesterday and today narrowly they missed. See, this is today morning 9:15, up to here they came. Even if we add 0.1% buffer, you won't get the entry. So that means it's a missed out trade. This trade is missed, narrowly missed the trade. Even after adding the buffer also, the trade is missed narrowly. So that means it is not a trade. HDFC Bank, already explained yesterday how I fine-tuned this zone. So I don't repeat. If anybody wants to know how we fine-tuned HDFC, please refer yesterday's video. This is a supply zone. This is a daily supply zone, not 75. We have a drop-based drop, daily time frame. Yesterday I told you how we fine-tuned. So please refer yesterday's video. So today prices didn't reach. Moreover, prices came down before entering itself. So we didn't get the entry. And next one is Gujarat Gas. This is a high liquidity demand zone, daily demand zone. We have a leg-in candle, 1, 2, 3, 4 base candles and rally candle. Already this one of these zones came very near to the zone. But how have we fine-tuned? Let me show you. This is a learning purpose I am showing you. But it could be an opportunity next time again prices are entering in this zone. Provide our software should list. Without listing the software, if you are getting into the zones, it is a high risky. Please do not forget that point. Because software is calculating the volatility of the market conditions. Based on that, it is listing the zones. You don't understand all those dynamics. Just simply depend on the software list only you take. Otherwise, don't touch the high liquidity zones. So here we have 75 minutes drop, 3 base candles and rally. So within this 75 minute zone, again we fine tune to 15 minutes. We have identified two 15 minutes area. One is a drop, 1, 3 base candles and a rally candle. It's not a very great leg out, but okay. This candle is bigger than the medium size candle. Nicely came out of this zone. After that rally base, again a rally candle. Follow through candle is there. More like these 15 minute zones are like LOTL zones, 15 minute zones, but not 5 minutes. Inside these 15, identified 5 minute zones. Let me show you how we fine tune. See here, this is the 15. These two are 15 minutes LOTL. Inside LOTL zones, we have 5 minutes. Drop, 2 base candles and a rally candle. After that, there is a move. Medium size leg candle. Medium size leg candle. That means the follow through candles are there. Again, you have a leg candle, 4 base candles and a rally candle. After that, the base is there, came out of the zone, so didn't consider this base. Anyway, this base is not part of this 15-minute zone. So this is about the 15 minutes. And today prices didn't enter into this zone at all, first of all. So we didn't get an entry. So next one is last one, Dixon. Dixon Technologies, we have a rally, 2 base candles and a rally. This is what our software identified this zone. And previously there is a huge move from here. That means strong order flow is there in this zone. Today prices didn't enter. Even before entering it moved up. So we didn't get a trade, but I'll show you how I fine tune. So inside we have a drop, 2 base candles and a rally. Rally with gap. So this is the real order flow inside this zone. Now inside that again 15 minutes we fine tune. So here we have leg candle, base candles and a leg out candle, follow through candle. And prices came down and again moved up, but it entered into the zone, 15-minute zone. So that's why we got 2 15-minute zones here. First of all, these 2 15 minutes are LOTL zones. This is a drop, base, rally. This is LOTL, overlapped. These 2 15-minute zones are overlapped. So within that 2 15-minute zones, let us look for 5-minute zones. We have a leg candle and small base candles. Actually, they are also looking like leg candles, right? But they are all tiny candles. Tiny candles, even 70% body is there, 75%. We will consider as base candles. That's why drop, base, rally with gap. And again, within this 15 minutes, we have a drop candle, 2 small base candles, and a leg out candle. Leg out candle is not really, but you see, it looks like a big. This is the problem with these softwares, drawing softwares. Unless you zoom in or zoom out, sometimes you won't get clarity. Anyway, here you get even more body because there is a gap is there. Within the gap, if you fill the body, you are getting. Definitely this is going to be a large size leg candle only. But if you really see, the order flow is started from here. Let me draw a zone. Demand zone. See, these candles picked up the orders from this area and again created a new base because slightly pierced. This one is slightly pierced. They again created means probably there is a institutions, this is the area, they might have decided strong. Anyway, we have these 2 zones very close to each other, LOTL concepts. But anyway, today prices didn't enter into this area. See, one advantage with LOTL is, if one zone is violated, immediately we can pick up the orders from the next zone. So by the time supply will be weakened, and demand will give a big push. Previously we have seen some trades. So almost some 2-3 weeks back, continuously we have seen 2 or 3 days. We have 2 zones within a 5-minute zones within a 15-minute zone. The first one is violated, second one got success. So once when you have such kind of zones very close to each other, if one zone is violated, please take the second trade. Or you can do one thing, you can combine both the zones together and you can place your orders. But remember, when you combine both, it should be within the risk. Risk should not exceed more than 2% on your capital. If that is the case, you should not combine. Each you have to take as a separate trade. Okay, this is about the high liquidity zones generated in our previous report. Hope this information is useful to you. Let us all meet again in our next video. Thank you.